Good evening. For the checking purposes, kindly put your messages in chat box whether I am audible or not. Quick. Oh, fine. Okay, thank you. Thank you. Okay. Good evening, everyone. So today's topic is high probable day trading strategies. It's a most demand and highly required strategical courses to belong among the clients. So maximum of the clients is always looking like these strategies to build their portfolios or build their trades on day-to-day basis. To compare with the so yesterday previous session was your wealth management and then safe investment. So that this part is completely different. This is completely purely for the day trading strategies. So what are the trading strategies are there and what are the strategies you have to follow? Which is what are the things are having a high probability. So that before I got to say one story to you all. So everybody knows cricket, right? So maximum of the people is knowing cricket, I think. Okay. So in the early stages, Sachin Tendulkar was a player. So maximum of the hitting probability of sixes is very limited. To compare with Sourav Ganguly to Sachin Tendulkar, the hitting probability of Sourav Ganguly is maximum to compare with Sachin Tendulkar. After that, to compare with Sachin Tendulkar and then Mahendra Singh Dhoni, the hitting probability is Mahendra Singh Dhoni is too high. To compare with Mahendra Singh Dhoni and then Sourav Ganguly, the helicopter shot hitting strategies and then hitting ratios will be more high to compare with Sourav Ganguly to Mahendra Singh Dhoni. So the strategies are various. So everything is a Mahendra Singh Dhoni is following on strategy, and then Sachin Tendulkar will follow. I was followed on strategy, and then Sourav Ganguly was followed on strategy. But the ultimate aim they have to hit the sixes. But the target is the same. Their aim is the same. But their implementation and then their strategies will be vary. So that the same thing is implementing here. So that a lot of strategies are there. More than if we want to build more strategies, it's a n number of strategies are there. So ultimately, it's approved strategies as per the statistical model, and then more than 200 plus strategies are there in financial market. So it's a lot of studies and there. It's a lot of tools are there, and then so a lot of studies and tools as with the comparatively with the candlestick charts are there. So put together, we are looking around nearly 100 plus strategies is a high probable strategies which is giving around nearly 80% of the success rates. Okay. So now today we are picking like this stocks and picking like this the strategies of what will going to give us a high return to you in your day-to-day trading basis. So these kind of things will be eliminate your big losses. So if you want to, if any some pitfalls, if you want to avoid some pitfalls, you have to follow these kind of strategies. So this is very simplest things. So the simplest thing will give lot of revenues today to daily trading basis. Before that, come to the session. It's a standard disclaimer. So you have to take this entire session as an investment purposes. It's not investment purposes. It's only for your information only. It's a study purposes only. You have to take this as a very careful. You have to take and then you have to take care of your portfolio, and then you have to take some entire care about this your tradings and then your day-to-day activities about the financial market. Okay, so completely responsibilities will going to happen from your end only, so it will be more benefit to you and as well as of us. Okay, thank you. And then is a history of candlesticks. So candlesticks is the origin for the technical indicators. So okay, so earlier stages, one person is named Homer. So he is a first person. So 1600, some rice futures market was held in Japan, so country of Japan. So that the rice futures market was there, and then the people are trading with their rice and then their products in the particular market. So after 100 years of that market, at 1700, the person named Homer, he has found something. So the supply and demand ratios will be he has identified the early stages, because the thought of the people, the thinking of the people have given some change, has given some changes in the rice futures market. He identified. So nowadays, it's a supply and demand is a very simplest thing among the all traders. But it took 100 years to find this kind of strategies, because the supply and demand is the most thing. If the people want to think, wants to think the what to have to buy, what you have to sell, the same thing will be going to reflect in the financial market. If the people is we are all there and then we are all thinking like this, and the gold will be going to high enough in coming days, the same thing will be going to reflect in a buy mode in financial market, then only the demand will be automatically increasing, the price starts increasing. Okay, the same kind of thing was identified in this year 1700, the person named Homer. Okay, yeah, this was a story. Hope you remember this. Can I get a small? Can I get a small introduction from you? Do you have remember this? Please use the chat box as fast. Do you remember this kind of thing? Yes, it's a graph sheet. Okay. So graph sheet is even this our lower standards, nearly it's a 9 standard, 10 standard. We have used to put some graphs in this graph sheet. Okay, the same kind of thing has implemented in the early stages. They have recorded the market prices. So what are the prices opened in 50, 100 or 150? So day high and then day low, and then price of the opening has been marked like this. So the later on that the entire system has been, mechanism has been changed into the systemized, and then everything will be updated into the softwares, so that now easily we can identify with the candlestick formation. So this is the origin of the candlestick charts. So this is a basic form from the, it has been created from the graph sheet only. So it's not a rocket science. So easily we can analyze from this and graph sheet and then the candlestick formations as a very easy process. So they have identification is there. So what are the probabilities are there? What are the things are there? They have easily identified. I have to share one example to you. So if you going in a road, if you're traveling with your bike, is suddenly your bike came to a problem. So what will going to do? So you have to give your bike into the mechanic shed, or you have to bring your bike into the showrooms to rectify your fault. Okay, so things will be different. The both people will do trying to rectify your bike only ultimately. The one person in this mechanic shed, the mechanic will start the bike and then he has to identify immediately what are the faults are there in your bike. He will start immediately, he will start rectifying everything. In that showrooms, they have to connect with your bike into the system. They have completely scanned your bike, and then what are the faults are that they have easily identified by the theoretical mode. So both things are different, but the process is same. To ultimately they have to rectify your bike only. So that the same thing has implemented here. Okay. So fundamental analysis is completely different, and then technical analysis is completely different. So the fundamental analysis, like as a showroom kind of things. So what are the engineers will do? That they have completely studied and then completely scan your bike, and then by theoretical purposes, based on his information, he will going to clear your bike, everything falls. Okay, so in the mechanic, he has to identify with some indications like the sound or something, some variations like this. He has to easily identify, and then he has make your bike as a perfect one. Okay, the same thing is implemented here as a technical analysis. Okay, so technical strategies is a skilled based one, so not a study based one, it's a skilled based one. The people has to get lot of knowledge, a lot of practice to identify the market moves and then identify the market formations. So whether the market can buy, whether the market will going to sell. So these, the people can easily identify like this away. Okay, fine. This is the candlestick basics. So two types of candlesticks there. One is a green candle, another one is a red candle. So it's a higher end, it's a lower end, it's a big. It's called as a high and low prices. This is called as a red candle, which is called as a high and low. The same price is open is high, and then low is a close is a lower side. In this case, in green candle, open will be in a lower area and then close will be in a higher area. So these are the two types of candles. It's called as bullish and bearish candle. Okay. So this is the chart. So it's a synchronizing of the chart. So day to day is a move to move. So market price has been uniformly so presented as a graph. So this kind of things as a candlestick chart formations. So this is the history of the Nifty. Say early stages, it has started from nearly some 100 points from this. Sorry, 1000 points from the 1995. After that, has a long journey. Nifty has reached nearly 12,000 something. Okay, fine. These are the stocks. This for the remember for the people so who wants to invest in stocks as a long-term move. Okay, this is the Infosys. The people wants to invest with the was invested in the 10,000 rupees. The value will be like this. Okay, so if you invested in this year 1993 in Infosys, the total values is 2.99 crores, I think. Yeah. And then the Imami, Ichermota, Shishiman, Sunpharma, HDFC Bank, HDFC, Asian Paints. So a lot of stocks are there. So they are given nearly is ultimately the 24-year, 22-year, 27-year, 23 years. Maximum is a 30 years. So total multiplier of this is that they are giving as a CAGR as a 39%. Okay. So multiples of this 2,973 times multiplied is Infosys structures. Can't imagine. This is a wonder of the eighth wonder of the portfolio. So Warren Buffett said the equity investments and then their compounding of interest rate. Interest will be the eighth wonder of the belt. Okay, so 2,973 times of multiplier, you can't imagine. Though nothing, no one business is giving this kind of returns on these earnings in this financial market or some any industry. So that you have to take your trades as a business. So not do some gambling mode or not do some treat like this as a lottery tickets. Okay, so you have to do some disciplined trades. You have to follow some certain rules and disciplines. Once a signal and indication comes, you have to enter, and then signal has exited, and then you have to exit from the market. So it's a lapse, you have to exit from the market. So the same simple thing you have to follow in the financial market. Okay. So the multiplier is a 2,973 times. So the least is for 2,225. So 225. So HDFC Bank is multiplied into 225 times. So the net CAGR was 27%. Okay. So the value was invested by this with the 10,000 rupees, which is the value is given as a unimaginable prices in this financial market. Okay. Sure. This is the power of compounding and then power of investing. Yes. Now, this is the time frame impact. So, am I slow, right? Is it okay, or I have to make slower than from this current presentation? Are you with me? Yeah, fine. Thank you. Okay. Okay, so time frame impact. So the $1 million question between the traders. So every time, so whenever we are conducting webinars or seminars, so a lot of people is asking like this, sir, what are the time frames are there? What are the time frames we have to follow for intraday? So this is a $1 million question to the investors between this. This is traders will be various. There are nearly 3-4 types of traders are there. One is a scalper. Scalper means they have to trade with their micro level seconds of the trade. So nearly for the 1 minute, 2 minute, and then 3 minute candle, you have to trade with it. So if you are a scalper, you have to follow the M2. M2 means minute 2, and then minute 3 you have to follow. Your holding times will not be more than 16 to 20 minutes. If you are a scalper, you don't want to hold your position for nearly for 1 day or 2 days like this, not like that. Okay. So if you take a trade as a scalping, so based on the formation only, the entire strength will be like this up to the 16 to 20 minutes of the potential you can earn from this formation. Or else you have to exit from the position, you have to cut from that market and then you have to exit from it. So if that before of the 16 to 20 minutes, your target has been reached, and then you have to exit from the position also automatically. Okay. So until the target is not yet reached, you have to exit from the position from 60 to 20, or else the position will be against to you to in the rest of the time, so that the high probability is there, so that you have to exit from the position up to 16 to 20 minutes. Keep in mind. Another one thing is an intraday trader. Who are the people is wants to trade with the intraday? So here today we are focusing like this. This is a M5 and M15. If you are a 5-minute trader, if you are an intraday trader, so two types of intraday trader are there. One person is following the 5-minute candle, another one person is following the 15-minute candle. Okay. So if you choose a 5-minute candle, the ratio will be there. So 40 to 50 minutes you have to hold your position, not more than that. Okay. So for every 41, 50 minutes, if you find any formation based on the 5-minute candle, you have to make entries. Okay. Another one thing is a intraday is a M15. The people who wants to trade with a 15-minute candle, you have to follow the 2.25 hours is the maximum ranges. If the position should not be more than for 2.5 hours. So maybe it's a multiple of 10 times. So if you find out to the 15-minute candle, if you have any formation like this or Doji or Harami or Hanging Man or Inverse Hammer, whatever the formation are there, if you find out, you have to hold your position for the next 2.5 hours. If the target has reached, you have to exit from the position, or else the target has not yet reached, you have to completely close your position from these ranges. Okay, so 2.25 hours. And then intraday swing traders. So what are the players are there is like as a swing trader. Swing trading will be is like as a sessions, creating supply and demand zone. So what are the people are there? From the market it starts with 100 rupees. If the market goes up to the 120 rupees, then we leave in the same area. The demand will be some supply will be the automatically increasing, so that the price will be automatically start fast. So these kind of things is called as a swing trade. If you follow the 1 hour trading candle, you have to hold your position up to the next 8 hours to 10 hours maximum. And then swing trade, another trade server is a 4-hour candle pattern follower. So who are the people is following the 4-hour candle, they have to hold your position up to the 32 to 40 hours. So it will be help to your T+3 positions or T+5 positions in a margin tradings. Okay. And then swing trading day one. If the trader wants to follow the day one candle, the people has to follow their rule, and then he has to hold your position up to the next 8 days to 10 days. Maximum you have to hold your position up to the 8 days to 10 days. This is called as very short term investments. So for the people who wants to use utilize the exact lows and exact falls, the people has to invest in these periods, and then they can get nearly 5% to 10% return on that every time for that, based on the stock's potential. If the global indexes is affected, if the entire companies has fall based on the global indexes effect, is the thing is there is no reason behind the financial statement, or is there any reason behind the company audit report or cash flow statement? Is not any problem like that, but the company is falling unwantedly based on the global scenario. You identify that those kind of falls nearly for 2000 points or 2500 points in Nifty. So based on that, some stocks will extraordinary fall. So you have to identify the stock and invest it. For the 8 to 10 days period, this is called as a swing trading. You can get highest return on that. Okay, so short term period it will be highly impact. Another one thing is a position trader, who follows a weekly one candle. As I say, every week is a candle formation is there, right? So if you follow the weekly candle, you have to hold your position up to the 8 to 10 weeks, which is around nearly 2.5 month or 2 month maximum. Okay, you can hold your position. These people is called as a short term investors. Okay. Another one thing is a monthly candle. The people who follows a monthly candle, he has to follow the trading around nearly 8 to 10 months. Up to he has to wait for 8 to 10 months. The maximum the target has reached automatically will come. If the target is not yet reached, you have to hold your position up to the 8 to 10 months, or else you have to exit from the market. Hope you clear now. So based on the time frame, yeah, Sir Kamalesh Verma, which time frame is best for intraday? So that's why I'm shouting now. Please listen. Please give your ear. This is scalper, and then intraday is a intraday trader. This is a 15 minutes. The trader is both two time frames of very best. It's a 5-minute and 15-minute candle for the intraday traders. Okay. Please follow. Maximum is a high. I have given the highest priority to this for M15 candle for intraday traders in equity market. So that will give more impact and the reasonable returns to you on every trades. Okay, fine. Is there any doubt you can ask me, or else we have to move forward? Hope you understand. Yes, fine. So I have to get your quick answers from chat boxes. So we have nearly hardly 1 hour. So if you make delays, so the things will happen here. So we can't able to cover the rest of the things. So that kindly give your quick replies on each and every time. Okay. Yeah, it's applicable for commodity also. Yeah. If the commodity, you have to follow 15-minute candle in morning hours. After US market opening, you have to follow 5-minute candle. Okay, so because of based on the volumes, you have to interchange. So from 15 minutes to 5 minutes. Yes, fine. Thank you. And then this is a high probable candlestick patterns are there. So there are a lot of candlesticks are there, nearly 32 bullish pattern and then 32 bearish pattern are there. Almost 64 types of candlestick formation are there, but we have to choose nearly the 3 patterns. So this is called as a doji. So doji means it's a high probable trend reversal indicator, which is holding nearly more than 80% of the success ratios. Okay, so normally the candlesticks is perform well. So if you don't know any trades, tools and signals, everything, you have to follow such a things of the doji formation in your financial market for your trades. It will give reasonable impact. So if you follow one rule, you have to choose one rule. You have to stick on with the one rule. You have the once a formation has came with the same price, same indication, you have to record it. So number of trades, how many number of trades you have to trade based on the formation, and then you have to list it out. So then only you can easily measure your success ratio. So you have to get a success ratio as 5 or 6 or 10, maybe 50, 60 or 70, 80. You have to easily measure based on your trading trends. Okay, but the formation are same. So it's a universal formation. If you find out the formation with the 5-minute candle, you have to hold your position up to the next 10 times. So almost the 20 minutes to 20, maximum is 30 to 35 minutes or 40 minutes. You have to hold your position for the next 10 times. Okay. So based on that, you have to work. And then so 3 types of doji are there. One is southern doji. The southern doji will fall after the will create after the fall of the market, and the northern doji will create after the rise of the market. We'll show one by one. So how to identify the dragonfly doji or southern doji and northern doji. This kind of thing is called as a dragonfly doji. This look like as a dragonfly. Okay, so that you can easily identify. Is having is a lengthy tail, means it's a lengthy recovery is having this formation. Okay, there's a 3 types of candlesticks. Is a high probability candlestick charts. Okay, and then the basic thing is relative strength index. So one more thing is there. So after the theoretical mode, you have covered everything. So I will going to the live examples, and then what are the things whether how to identify the formation of that in the trading charts. Okay, I will explain everything. Yeah. This is RSI. RSI means relative strength index. Yeah, I will show. Mr. Kamlesh, please show the demo of candlestick doji candles. Yeah, I will show you definitely. But before that, we have to cover the. Basically, you have to know what are the things are there. So what are the high probable indicator are there. Okay, so manually you have to know what are the things, what are the tools. Okay, this is called RSI. This RSI is having 2 types of areas. One is a 70 zone, another one is a 30 zone. Middle range is a 50 zone. So okay, so 70 is a overbought range, 30 is a oversold range, and then middle range is the 50 range. So you have to identify with the 3 levels. So RSI is called as a relative strength index. So based on the market supported formation, what are the relative supports are there in the market? Based on the statistical calculation, the system has automatically taken some measurements. So they have given the easiest, exact indication to the investor. This is the right time or this is the wrong time to entry or exit. So you can easily identify with the RSI signals. Okay. Another one thing is called as a MACD, which is called as MACD is moving average convergence and divergence. This is based on the moving averages. With the 9-day and 22 moving days averages is uniformly, it's a default mode they have taken. This is an indication. So what are the indication are there? How to buy, how to sell, we have to follow later on. Okay, so just know that this is indication. This RSI, this MACD indicator is having nearly one area. One is a 0 line, another one is a positive zone, another one is a negative zone. If the market crosses above the 0, this is called as a positive zone. So you have to stay with the buy. If the market is traveled below the ranges of lower ranges 0, this is called as a negative zone. You have to sell with the stick on with the sell positions in that particular area. Okay. So hope you understand what is the things are there is a basically. Fine. Another one thing is called as a Bollinger Band. So Bollinger Band is John Bollinger is an identifier. Is a founder of these Bollinger Bands. Okay. So Bollinger Bands is having 2 ranges. One is higher band, one is another one is a lower band. So it's 2 types of areas are there. It is the highest probability of the market for the upper side. these things is the lowest probability of the market is in a lower side. So middle one is middle band, which is called as a 20 days moving average, simple moving average. So middle band is called as a 20 days moving average. The upper side is having a 2 times of standard deviation. Lower times is having a 2 times of standard deviation. Okay. So these are the things are there. This is a Bollinger Band. So now we will see the practical thing. So what we are going to implement at those kind of strategies in the market. Okay. Yeah. I will share my screen. Can you see this? Yeah. Okay, fine. Is my voice is not clear? If anybody wants to confirm me, I want to confirm again. Is my voice is clear? Yes, clear. Thank you. Thanks so much. Thank you. Mr. Johnson. Yeah, you have to check your thing. Yeah. Voice is clear, I think. Yeah, fine. Okay, this is a chart. This is an indication. It's a Titan Company Limited. Hope you know well. It's a Titan Company Limited. It's a favorite brand in watches in India. Okay, it's a highly demand products they have made. This is a highly worth products. It's a maximum of lot of Indian customers is preferred to buy these stocks. So based on the performance. Okay. So the company is having a well reputation with all traders. Okay. So that we can easily invest, and then we have to stay on these stocks for the long-term purposes as an investment. For the intraday, we have to choose the two types of candlestick patterns. I'm using is a high probable of 15-minute time frame candle I'm using. Okay, for the intraday purposes. Okay, so there are two types of indicators we are using, right? The one is RSI, another one is MACD. So first, you have to see the RSI. What is RSI? One second. One second. This is a main chart window. You have to enter your symbols here. So it's a TradingView, investing.com is a free software. So you have to implement all strategies with this as a free of cost with this investing.com. And then if you are an invest client in a Zebu client, you can easily access our free software, which is giving along with your trading platform. So you can easily access that also. In working day, it will be working fine. And then it's a Titan Company Limited. Okay. You have to enter the symbol here, Titan Company Limited. So what are the companies you need? You have to easily click here, and then you have to identify the companies, and then this is an indicator. This thing of indicator. I want to place RSI indicator, which is called as Relative Strength Index. Okay. This is RSI indicator. This RSI shows two types of things, right? Two ranges. One is the range 70, another one is the range bound is 30. Okay. So high probable is there. So the investor, you are really struggle whether the price is moving up, whether you want to take a buy position or whether it's the right place or wrong place. You have to have some lot of doubts about to buy the stocks. But actually, the indication is giving if the maximum of the trader psychology, if the people is start buying here, when the market is crosses. If you are in outside of the market, though you are completely day to day, you are looking at the market high. If the market is traveling between the recently COVID time, the market has reached a low of 7,900 as a Nifty points. As a trader, got panic. They don't want to invest in this on the 7,900 period. But they have believed the market will go further down and down. Okay, but actually it's not there. To compare with other countries, our GDP also is good. So it's to compare with America is having said minus 30 as a GDP growth, but India is having nearly minus 23. To compare it to other countries, our fall ratios is too limited, so that we are in a strong. So each and every country is start falling, right? Each and every economy is in under crisis. So that the thing is happening, the economical measure has been framed based on the strength of the opposite country's economy. Okay, so that we don't worry more than that. Okay. So if the maximum of the investors is looking the prices, if the prices are going higher, they are automatically start to buying, because the market is the price of this movement is giving lot of attraction to the traders. For example, if the gold price is crosses nearly 45,000 to 50,000 per 10 gram rate, the people will be automatically accumulate gold to make store as maximum as possible for the prices, because they think the market will be goes up to the nearly 1 lakh rupees in future. So they are thinking like this. But actually, so Warren Buffett said, so whenever the people are in a excitement mode, so based on the price moves, whenever the people is having excitement mode, this is the right time to sell your stocks. The same thing is indicate the RSI. So relative strength index shows like this. If you are a trader, if the market is crosses nearly the 70%, 70 of the ranges of RSI, you have to sold your stocks. It's not for the 15-minute candle. You have to follow the 1 month candle. Okay. So if you are a long-term trader, if your position is crossed nearly the 70, okay, you have to wait for a certain times to reach your targets or reach you some good revenues. So once the market is start falling, you have to exit your buy positions or sold your stocks in the right area. Okay. If you are an opportunity seeker, if you want to make a buy in the market, you have to take a entries around nearly the 30 area. Okay, fine. So this is two things. One is the 30 area, the people who are all in the panic area. So okay, this is the right time to buy. It's the right area to buy your stocks. Okay. So whenever the people are in a very happy mood, so this is the right time to sold your stocks. Okay, please two things in your mind as a very sensitive one. Okay. Hope you understand so far. Yes. Fine. Thank you. Thanks so much. Okay, so two things are there. Now, what are the strategies we have to implement? Yeah, thank you. Thanks so much. Yes. What are the strategies we have to implement? This is a golden strategies we have to implement. So no technical trainers, no financial consultants told like this. It's a free of cost. We are saying it's for the goodwill of you. Okay. So these are two types of strategies you have to follow. One thing, if the market is crosses to below, once again I will share some notepad. So we see the whiteboard, right? Okay. This is a flat range. This is 70. This is 30. Okay. So no worry. So you no need to calculate or no need to draw from your end. Okay. So it is automatically calculated by the system. So you have to just apply the tool and watch the prices. You have to just listen the tools as what are the indication of the prices shows. So this will be your duty. You have to easily identify and then you have to get it done. Fine. Okay. The first thing, if the market is traveled between the areas, if the market is crosses, the maximum people got panic. Maximum people got panic because the fall of the market is so high. So in these areas, so that the profit taking will be more high. The maximum of the retail investors sold their stocks, but actually the investors, institutional investors, will do. They are start buying from these areas. They are thinking as each and every fall as an opportunity. So as a trader, you have to treat like this. If you have some lot of funds or everything is there, so you have to seek some opportunities. You have to wait for the opportunities. But please remind, don't create opportunities which is favor for you. Okay, so don't create opportunities, but you have to, instead of that, you have to wait for the opportunities. Okay. If you identify one tool, if you stay stick on with RSI, if you want to trade with RSI tool, you have to wait. So up to the once the market has crosses the 30 area again, okay, these are the areas the right time to buy. Once the market is in the 30, crosses the 30, this area will be the right area to buy. Please keep in mind, this is a strategy we have to implement it for RSI. Okay, once the market is crosses the below 30, don't do anything. Okay, please wait. Once the market has to crosses the ranges of 30 again, you have to take a buy position. And if the market is crosses the 30, what are the price are there in the screen? You have to take a buy position based on your time frames. Okay, but don't forget the time frames. If you are in a 5-minute candle trader, you have to exit your position with the 5-minute only, so not more than that. If you make the entry with the 5-minute and then you don't carry your position up to the 1 hour, 2 hour, 3 hour, 5 hours, don't like this, don't do the like this. Okay, so if you put a 5-minute candle, you have to exit from your position from the 5-minute candle only. Okay, yeah, this is the right area to buy. Another one thing, if you are a buyer, if you hold your stocks, okay, so this is the area you have to implement your strategies. You have to wait for your market to reach a good area, then only you can hold your stocks. If you want to make a fresh sell in market, so you have to wait until the market is crosses below the 70. If the market starts crossing the 70, you have to make a fresh sell in futures market. Okay, so not in a cash market, you have to don't do that. Okay, this is the area to make a fresh sell in equity market. So this is for the trade purposes you have to use. So hope you understand, right? Are you clear now? Yeah, Mr. John, yes. Okay, fine. Yeah, Mr. Another one thing is, one people is asking. Actually, is the thing, the market is not yet crossed nearly the 30, because instead of buying 70 area, your 30 will be very less. It's a highest probability of giving as a returns. Okay, so that the no need to worry if the market is touches 30 and the market is coming down nearly for 25, 23. No need to worry. Okay, once the market crosses 70, you have 30, you have to take a position. Once the market reaches a 50 area, it's a middle area, you have to exit your part of the position. For example, if you buy 100 stocks in the range of 30, okay, so once the market start coming the area of 30, it will be good. So because market is start traveling towards this kind of direction from the fall, okay, so that confidently you have to take entries based on these areas. Okay, so formation. Okay, once your 50% of the target will be square up in this area of the 50, the rest of the things will be square up above 70 or 70 above. Okay, fine. Okay, hope you clear, right? Okay, this is the same thing is shown here. If the market is crosses 70, okay, which is in a 15-minute, once the market crosses the 70 area, okay, this will be the area to square up your positions. Okay, you have to cut your position in these areas. So once the market crosses 70, this area to sell your positions. Okay, once the market is started 30, cross to 30, these ranges, if the market is crosses to below, no need to do anything. Okay, once the market is crossed to 30 ranges, this is the right area to take a buy position. So the indicators will not show any some failure or false signals. Okay, so the false signals will happen before the limitation of the lower ranges, nearly 1 minute. If you look for a 1-minute candle, or if you look for a 2-minute candle, some false signals may come. For the later on long intervals, so there is a high probability of the good signals only. Okay, so no need to worry about the false signals if the market is came. So because the RSI, so based on the data error or something like that thing, only the false signals may happen. But some good, if you're using some good softwares, so for the trading and technical analysis, okay, so this thing is good. So Zebu software also, so we are doing some lot of updation as a good one. Okay, fine. Another one thing is the MACD tool. Now I'm start using MACD. So moving average, convergence and divergence. Okay, these are the ranges are there, right? So there are two types of ranges are there. One is a flat area, This is a zero line. This line is called as a zero line. The above area, the market is crosses above. One second. If the market is crosses above, the market is crosses above, this area is called as a positive zone. You can easily show, can easily identify these areas. So when the market is crosses the areas of zero line, this is called as a positive zone. So one easily identified one thing. Okay, some lines are there, right? Above the zero line and then below the zero line, some lines are there. These lines called as histograms. These lines is an indication to the people whether the market is in a positive zone or negative zone. If the histograms, this lines is crosses the zero line, you have to hold your position for a buy position. Or else if you have in a sell position, you have to exit from this. Okay. Take a fresh buy if the market is crossing the zero line. Take a fresh sell or sold your stocks, everything. Okay. So once the histograms start falling, it's a ratio of the high will be limited. 1 is a 2 is a 3, because it's an indication the histograms start falling, so that the market will be going to reversal. Okay, so trend will be the reversal. It's an indication to have a big fall. So that once the histograms start falling, start reducing, the values will be reduced. You have to exit your position from the buy. Okay, these are the strategies you have to follow. Another one thing, so look clear. Is two types of signals are there. So one line is blue line, another one is red line. Okay, once the blue line is crosses the red line, okay, this is the indication to take sell position. This is the indication. So whenever the market is crosses a signal area, okay, you have to take a sell position in these areas. Okay, this opportunity. Another one thing, whenever the signal is crosses the lower ranges, okay, this is the indication to take a buy positions. Okay, so you have to follow these two rules is consistently in this, whether you are using with the MACD. Okay, but the symbol and then signal is not a matter. So if you have to use it's a bank Nifty, you have to use, but the strategies will be same, but then the script will be vary based on the what are the six. If you want to make anything, if you want to trade with Infosys or if you want to make the Axis Bank or ICICI Bank, you have to take entries, and then the same thing is only is a common, is a universal trading tool. Okay, no need to worry about the symbols. That before you have to choose the right symbol or best company stocks. Okay, so that is the main agenda. And the rest of the thing you have to follow the rules which we are sharing now. Okay, hope you understand. Can I get yes? It's the same things. Once the market is giving indication, we have to follow the two types of indication here as a MACD. One thing, if the signal line breakout, whenever you have identified the ranges, you can easily identify the maximum supply zone. Okay, so then only the price will start falling. You can easily identify based on the signals. Another one thing, this is a trend changer. What is the trend changer? Once the lines is crossing the zero lines, this will be the high volatility you can easily find. So based on that, from your experience, if you have gained some lot of experience in this financial market, you can easily identify these kind of things. Okay, so by practicing only you can identify. So you have to see some, you can easily identify some volatility in this market. So market is traveling in some zero ranges in flat range. You can easily identify based on the signals. Okay, so these ranges is a consolidation ranges. Okay, so this is a trend changer. The once the line signal lines and MACD line cross over the zero line, this indication will be a trend changer. Okay, so this I have to follow the certain rules which we are given here. Okay, hope you clear now. Yeah, so we have to use both the indicator together. For your strong confirmation, you have to use the both. Another one thing, we are calling, I am calling as this thing as a integration. Integration means it's a two simultaneously. I am using the two tools. One is MACD and RSI. One second. So normally I'm using the two tools, which is called as an integration mode. In this 15 minutes, some fall opportunity for trades. Okay, so some sell trades are there. Some you have to take some sells in here for 15 minutes. If you are a 1 hour or daily hour, the trend is a consolidation zone. The market is travel below the zero line. Can you see this? Market is start traveling below the zero line. So this is an indication. Here also we can see the trend reversal indicator. One second. Here also we have seen some trend reversal indicator. So this is the indication to short-term sell will happen in Titan Company Limited. Okay, so that the RSI also start falling from 70. Okay, this is a high probable range. It will be, maybe it will be come under the ranges of 50. So that this is the right time to take a buy in the 50 areas for Titan Company Limited for a short-term purposes. Okay, hope you understand like this. Yeah, you can applicable, Mr. Prakash, you can applicable the strategies for index, stocks, currencies, commodities, and everything. Okay, so I'm saying as usual. So there is no separate strategies, but this is for commodity, this is for currency. So there is no things is not like that. But you have to implement the strategies. It's a universal strategies are there. So that you have to use what are the scripts you need. You have to use it. Fine. For indexes, currencies, commodities, and then stocks also you can use. For futures and options, if you want to, you can use it for the futures. Option also is option having some separate strategies, which is called as a separate division. Okay, fine. Another one thing is a Bollinger Band. So finally, I'm using this as a Bollinger Band. Bollinger Bands. In these Bollinger Bands, you have to simply apply it as a Bollinger Band. So there is no indications required. So you have automatically applied. There is no tool modification there. Okay, so you have to apply the tool, and then you have to follow one thing. So whenever the band is closer, so there is no indication to market will travel one side. Okay, so whenever the market is in a bands are tightened, so you have to wait for your entries. Whenever the maximum the bands are expanding tremendously, this is a trend changer. Okay, so this kind of times the market is, the band is started here, so heavy fall, the band is width will be increased, so you have to wait for your entry position. So it will be give us a maximum as a drastical increase. So these kind of indications are there. One is a band tighten area is a caution area, and then it's a band expandable area is a caution area. The rest of the times market is travel in a flat mode. So whether the band size or band width will be in the same. Okay, so three types of caution areas are there for Titan Company Limited while using the Bollinger Bands. Okay, so that put together you have to use take a confirmation with RSI and then with RSI and the MACD. You have to put together, you have to take confirmations. Okay, hope you clear right now. Yeah, now we are seeing The candlestick patterns. What are the candlestick patterns? Are there is a high probable candlestick patterns, right? We will start once again. Okay. Whenever the market is travel in a higher range to lower range, some candlestick patterns will be there. This is called as dragonfly doji. The height of the candle, the real body of the candle, these things are there, right? This will be in 3 to 4 areas. This kind of thing is right. Another one thing. Another one thing. These kind of formations. These kind of formations are there. Okay. So this is the candles. Some real body will be increased. The probability will be automatically increased. For example, if the exact formation, this is called as a dragonfly doji, this is the exact one. Okay. So open price and close price will be same. Okay. And then the market has given some lot of low and then some reasonable highs are there. Okay. What are the lows indication? The market has given a strong low, strong fall. After the everything market has recovered. So the same thing, there is no selling pressure at all. Okay. The bias will be automatically added. You can easily identify the things. The candlestick says like this. Okay. Once the same formation you have identified, you have to initiate your fresh buy here in these areas. Once the closes are there, if you're finding the closing for the 5-minute candle or 15-minute candle for 1 hour daily, monthly, if you identify these kind of things, you can take your buy here. If you are a position trader, you have to take nearly the candlestick formation. If you identify this formation in day candle, you have to take a fresh buy. This will give a lot of good return to you between the closing areas. Up to the nearly 8 to 10 days, you can get a lot of return. Okay, so that you have to keenly monitor about these prices. So the probability, the real body of the sizes of the candle, if increases, it will give nearly, so it will give you 60%. If the real body of this open and closing prices will be the same prices here, right? It will be give 80% of the success ratios. So if the real bodies is increasing, the success ratio will be decreasing. Okay, but these kind of things are also called as a dojis, dragonfly dojis. Okay, one thing. This is a high probability indicator. This is a limited probability indicator, but you have to take same buy positions here when the market is shows like this a formation. This is 80%. If this is having a 60%, this is having a 70% success ratios. Okay, so in the doji you have to get this kind of things. Okay, hope you clear right now. Hope you clear. Yes, fine. Yusuf Muhammad. Thank you. Bye. Another one thing. Southern doji. After the fall, if the market created some doji areas, this is called as Southern doji. The market open and closing prices in the same price. What is the indication here? If after the continuous fall, there is no more selling pressure here. Okay, so that we can start buy here. So that this is a formation. So based on the time frame only, you have to use a 5-minute or 10-minute candle. Based on your trading style, you can use it. Okay, so this indication to take a buy here, Okay, this is called as a southern doji. Another one thing is called as a reversal formation, which is called northern doji. When the market is continuously going up, when the suddenly this formation is shows is the indication to take a sell position here or sold your stocks here. This is a highly probable indication. Okay, so maximum of the buyer, if you are a buyer, you have to sold your all stocks here. So based on the formation. So if you find this formation in daily formation or monthly formation, The trend will be in a downtrend for a certain period, for 10 days to 15 days. If you're finding in a month, the market will be travel lower side, and within for 3 to 6 months, the market will be travel around nearly the lower ranges. Okay. Hope you clear everything, right? Shall we go for a Q&A? In this chart, I will explain, I will show something. So how to identify the formations. One second. This is a chart, right? For a daily, you can identify some formations. This kind of things called as a trend reversal indicators. These kind of things. One, another one thing. Yeah, this is a trend reversal indicators. You can easily identify it based on the formations. So you have to record your entries. So how many trades you have made. So from the number of trades, if you identify some formations like this, if you made nearly for 20 to 30 trades, so you can easily measure your success ratios. So how many success I am getting, how many failures I am getting. So then only you can come to the conclusion. So based on the trades, based on the strategies we are using. Okay, fine. This is the conclusion mode. Now I conclude everything from the beginning. So you have to choose the right stocks. Yesterday we have a brief session about how to choose the stocks, how to choose the best companies. Okay, and then the second thing is how to do your trades as a intraday trades. Now we are having a session like this because the intraday trades, there are some certain formalities are there. So one is a price having is a 2-minute candle to up to the monthly candles, the traders ratios will be very. If you have limited margin, if you trade with exposure, you have to stick on with scalping or intraday trades. If you are a position holder, so if you have limited margin, nearly the 50% or 60% of the margin, the rest of the thing you are using for T+5 something or basis, you have to stick on with the 4-hour or 1-hour candle time frames. So if you are a short-term delivery client, you have to stick on with the daily candles. Okay, so based on that only you have to take your delivery trades or something. Okay, but don't carry your failure trades. If you have a scalper, if you want to take entries with the 5-minute candle or 10-minute candle, once the entry got failure, so don't carry your position for the 1 hour or 2 hour or daily or monthly. Unwantedly, you no need to carry your position at any point of time. Once a signal came, if the indication, if you find out, once a signal came, take a buy. Once the signal came, you have to take a sell, exit from the market. Don't wait for more. Okay, so that this is not a final opportunity for you, or this is not a one-time opportunity for you. So market is run always is the same thing. Okay, the market is always genuine. So as a trader, you have to follow your certain rules and everything you have to follow. Based on that, your daily and then your practice will makes you as a very good perfection man. Okay. So you have to follow the certain rules. So discipline will give you a lot of return to the beginners. So if the experts level, so your fund management level, and then your target and then stop loss management will be very okay. As a beginner level, you have to follow the strict rules to you have to eliminate your losses. To eliminate your losses. So the earlier stages, we did some lot of mistakes. So that if you follow these kind of rules, the video will be shared to you. Okay, so you can rewind the video repeatedly, hear the video again and again. You can watch your videos every time. Okay, so then only you can equip how to use the tools, how to make an entry or make an exit from your entries areas. Okay, hope you're good. Have a great day. Is there any doubt? You can call me. Okay, first thing is there any doubt? We can give a clarity here now. So as a MECD, you can see the videos also. So again, it's the same tool. You can I will share the video. You can ask everything, and then you can see the one by one again. Okay. So no time to explain again for that one thing. Okay. Is there anything? Your questions will be framed like this, based on the today's session. So it will be more benefit to other traders also. So they are having some lagging in that particular area. are unable to understand something areas are there, and they can easily get clarified. Yes, a long term and short term. So you have to choose based on the indication. If you preferred with the 1 hour candle, the strength will be limited. So that will be for 1 day or something, 6 days. Yeah, Arun Murugan, great explanation. Thank you, Arun Murugan, for your topic. Okay, so 1 hour or 2 hour. So you have to follow something. So strength will be there. Okay, once you grab the strength, you can get a lot of returns. Once you lose the opportunity, you will be failed. So this is a short-term trade. This is a long-term trade. We can't able to pre-decide whether it is a short-term, whether it is a long-term. The market will be automatically decide. You have to stick on with the market, or you have to exit from the market. Okay, Jay Kumar, very informative session. Thanks a lot. Thank you, Jay Kumar. Thanks for your feedback. Okay, so those kind of things are there. Okay, so you have to follow with the market, stick on with the market. So don't stick on with your strategies. Okay, please use the strategies based on the market move. Okay, so that will be give a good return. It will be give a very good clarity to you for your investment purposes. And then usually you have to use a 1:2 stop loss ratios. Okay, so that thing is important. This is a secondary level for that. So if you get advanced levels, you have to use the stop loss management as well, sir. If the 1:2 stop loss ratios, if you're using, so the maximum ranges will be, you can get a lot of good return. If you fail with the 50-50 ratio also, you will be ended up with the profit mode. Okay, so those kind of things are there. Now I am initiating the poll here, right? So you have to record your votes. You can record your votes based on the session today. Okay, the poll is visible in your screen. You have to record your polls. Yeah, you can ask your questions also simultaneously, no problem. Yeah, I want to learn support and resistance. The support and resistance is a very simple thing. So we have some lot of tutorial videos are there. Please subscribe the channel Zebu. Is that EBU? So I will put in a screen. 1 second. It's the channel name Zebu. Is that EBU? Please search in YouTube and then subscribe this. You can access all our free videos. Okay. Which one? Ashok, can you show your question again? Yeah, what will be the target and stop loss? The target and stop loss you have to pre-decide. Don't think. Okay, so based on the indication only. What are the signal shows? If the signal shows buying area, some signal shows the buying area. What are the price here? You have to take a buy. If the signal shows the selling area, what are the price here? You have to sell. So there is no price or stop loss for this based on the studies and tools. Okay. So you have to place a stop loss whenever you are using the trend line or supports and resistance. Whenever you are follow these kind of things, you have to make a stop loss based on the prices. But the rest of the thing, if you use RSI or MACD indicator, you have to make your stop loss based on that indication. It's the entry and exit only. Okay. Yeah, fine. There's a doji candle is there. Is something is three types of doji. One is doji is fine. Another one is a northern doji. Another one is another one is southern doji. Another one northern doji. There are three types of dojis are there. It's a more important high probable indicator. And then is put together as a total formation. We can identify nearly the 8 to 9 types of dojis. But we are giving a high weightage to the high probable indicator. Okay, fine. Yeah, the videos will be given to you by the tomorrow or tomorrow morning, tomorrow evening. Okay, you will get it. Yes, RSI 14 is a 14 days. Is a uniform indicator for universal indicator. Amit, so 14 is the indicator. RSI 14 time frame. Yes, so there is no time to use the demand and supply zone. So demand and supply zone you can easily identify based on the tools. One thing is like crosses the 70 area, the market is entering into the supply zone. The market has entered into the 30 area is called as a demand zone. Okay. So lot of indicator, lot of buyer will be automatically added in the prices. For example, simple thing, if you wants to buy one pen, now the Parker pen is rate is 350 rupees or 400 rupees. So if the price comes to nearly the 2000 or 250 rupees, you can prefer to buy two pens or more pens based on that. Based on the price is very attractive. If the pocket pen is increasing the prices of 70 or sorry 700 or 500 or 600 something, your interest will be limited automatically because you can buy from what the things you need. So if you price crosses above the 700, you have to prefer for one pen only. If the price goes below the 200 or 250 levels, you have to show high interest to buy the more pens. So based on your apart from your necessity also you have to take something. So this kind of the price will be creating the supply and demand surge. Okay, fine. Which is the best setup for the intraday trading? I am also trying to say for the last 1 hour is same like this. Okay, so you have to follow the same thing what we are giving here. Okay, fine. Yeah, so almost is time is 7:35. Yeah, so is there any some further subject to learn further? Yeah, it's in our Zebu school, so it's a website is there, and as a YouTube channel, you have to subscribe and then access all courses. So a lot of courses are there. If you want to more about the supply and demand, if you want to more about the currency trading strategies, are there? So something is there. Or else, if you want to get a professional courses for 10 days or 15 days or something kind of things are there, you have to visit https zebuschool.com, sorry, instamojo.com. You have to visit this website, and then what are the course you need for your advance or upgrade your skills, you have to directly purchase from the your web store, and then you can get benefited. Okay, thank you. Please complete your poll. Okay, complete your votings. Yes, a link is there already, we have given, right? RSI, actually you have to correct your RSI up to the 70-30. 80-20 is stochastic only, you have to use 80-20. So RSI ranges is universal formation is 70-30 only. Prasanna Kumar, you have to correct it. RSI 70-30 is a universal standard mode. Okay, fine, thank you. Okay, please complete your poll and then exit from the chat room. So it's a really, I hope you have learned a lot everything. Okay, so there is a wonderful day I have spent with you for more than 1 hour. So it's the right time to start your learning everything. So it's a beginner mode. So we no need to give a lot of input to you. So based on the primary levels, it will be confusing more. So you have to review the videos again and again. So then only you can get fluency with stock and get a strong identification based on the strategies which you are giving earlier, RSI, Bollinger Bands, and then MACD. So just start implementing your trades. You have to just do the paper trades also. And then if you want to take your accounts, just open an account with the Zebu, and then you can get all benefited everything. So then only you can easily contact me and contact me as a frequent mode as a clarity purposes. I will come to know and then I will give clarity to you at any point of time. Okay. Soundarajan. Thank you very much, Karthikeyan. Thank you, Ji. What is the fee structure? Fee structure is different. So you have to, based on your volumes or based on your trades, you have to get. Okay. So please call our team and then they will get back to you. So they will call you soon. Fine. Yeah. Thank you. Thanks so much. Have a great day.
Zebu is a 10-year-old trusted financial services company in India, member of NSE, BSE, MCX, MESI, ICEX, and CDSL. The excellent technology-oriented and hassle-free trading platform will help you to execute stressless trades. Our artificial intelligence tools and statistical metrics will help to grow wealthy. Our webinars and seminars will provide excellent knowledge source about financial literacy. Our algo tool will help to save times as 200 times faster than normal trade execution. It's just 10 milliseconds. Join with us, have a wealthy life. Happy trading.